Impact Report, projected 50% increase in adoption rates across gaming, supply chain finance and social media by Q1 2025. Date, February 2, 2025. Executive Summary. The projected increase in adoption rates across the gaming, supply chain finance and social media sectors, a forecasted 50% rise by Q1 2025, highlights significant shifts in business strategies as global competitors adapt to evolving market dynamics. This report outlines the anticipated changes within these sectors, the drivers behind the growth, and the strategic adaptations businesses are making to thrive in a rapidly evolving landscape. Sector Analysis. 1. Gaming Sector. The gaming industry is poised for robust growth, projected to exceed $200 billion by 2025. This surge is primarily driven by advancements in technology and an increase in user engagement. Key innovations include augmented reality AR and virtual reality VR. These technologies are enhancing the immersive experience, attracting a wider audience. Cloud gaming. This allows users to play high-quality games without the need for expensive hardware, broadening access to gaming. Mobile gaming expansion. The rise of smartphones has led to increased participation in gaming, particularly in emerging markets. Increased accessibility and immersive technologies are expected to significantly enhance user experiences, contributing to the anticipated adoption rate increase. 2. Supply chain sector. The supply chain sector is set for substantial technology adoption with a projected 50% increase in adoption rates. Key drivers include automation and data analytics. Companies are investing heavily to enhance operational efficiency and resilience. Blockchain and IoT, Internet of Things. These technologies are crucial for providing transparency and traceability, particularly in navigating geopolitical uncertainties and market volatility. The ongoing shift towards a more digital supply chain is expected to be a game-changer, facilitating improved logistics, inventory management, and customer service. 3. Finance sector. The finance sector is undergoing a transformative phase with significant emphasis on technology modernization to respond to a low-growth, low-rate environment. According to a Deloitte report, focus on non-interest income. As banks face challenges with net interest income due to rising deposit costs, they are pivoting towards enhancing wealth management services and investment banking fees. AI integration. Financial institutions are increasingly adopting artificial intelligence to streamline operations and improve customer experiences. The anticipated economic environment is expected to push banks to recalibrate their strategies, focusing on technology and innovation to sustain profitability. 4. Social media sector. Social media platforms are witnessing a surge in adoption as they increasingly integrate e-commerce features. Predictions indicate interactive experiences, enhanced user engagement through live shopping events, and personalized content delivery is driving growth. AI technologies. The integration of AI allows for tailored user experiences, which is expected to significantly boost adoption rates. Social media's evolution towards e-commerce integration is expected to redefine user interactions and monetization strategies. Common trends across sectors. Across all sectors, a common theme is the push for technological innovation and data integration to enhance customer experiences and operational efficiency. Key trends include technological innovation, emphasis on leveraging new technologies to improve product offerings and streamline operations. Data integration. Companies are increasingly utilizing data analytics to make informed decisions and enhance customer targeting. Adaptation to market dynamics. Businesses are recalibrating their strategies to navigate changing customer expectations and economic environments. While the gaming and supply chain sectors prioritize immersive technologies and transparency, the finance sector focuses on regulatory compliance and diversifying income streams. The social media sector stands out for its rapid evolution towards e-commerce integration. Timeline of events. 2023, initial projections begin to indicate shifts driven by technological advancements across sectors. Q1 2024, investments in automation and data analytics begin to materialize, particularly in supply chain and finance. Q1 2025, anticipated realization of a 50% increase in adoption rates across all sectors with significant adaptations in business strategies. Conclusion: the projected increase in adoption rates across the gaming, supply chain, finance, and social media sectors highlights a transformative period where technology, customer experience, and regulatory landscapes are reshaping business strategies in response to evolving market dynamics. Companies that embrace innovation and adapt swiftly to these changes will be better positioned to capitalize on the opportunities that lie ahead. Sources: 1. Gaming Industry Report, Star Heroes. Linked /medium.com/@starheroes/2025 Gaming Industry Report Forecast by Star Heroes 67767A7EF546. 2. Deloitte Financial Services Industry Outlook, Deloitte Insights. Linked /www.deloitte.com/us/n/insights/industry/financial services/financial services industry outlooks/banking industry outlook.html. This report provides a comprehensive overview of the expected changes and adaptations in 4 key sectors as we approach Q1 2025, underscoring the vital role of technology and innovation in driving growth and competitiveness. 1. Gaming sector growth versus market saturation. While the gaming sector is projected to experience a 50% increase in adoption rates and is forecasted to exceed $200 billion by 2025, it may also face challenges from market saturation. The rapid influx of new players and the potential for diminishing returns in a crowded market can lead to a paradox where growth is high but margins are thin. This counterintuitive dynamic suggests that while user engagement is increasing, the profitability per user may decline. 2. Supply chain transparency versus complexity. The anticipated rise in technology adoption in the supply chain sector, driven by blockchain and IoT for greater transparency, could lead to increased complexity. The more transparent the supply chain becomes, the more intricate the interdependencies and data flows may be, potentially leading to inefficiencies and vulnerabilities. This complexity contradicts the expectation that transparency alone will streamline operations. 3. Financial sectors focus on non-interest income amid low growth. In the finance sector, banks are adapting to a low-growth environment by focusing on non-interest income through services such as wealth management and investment banking. However, this shift may be counterproductive if the market becomes oversaturated with similar services, leading to diminished returns and increased competition. The assumption that diversifying income streams will automatically lead to growth may not hold true in a crowded marketplace. For social media's e-commerce integration versus user experience, the projection for social media platforms to increase adoption rates through e-commerce features and enhanced user engagement may overlook potential user fatigue, as platforms prioritize commerce over social interaction. Users may become overwhelmed and disengaged. This counterintuitive situation suggests that an increase in features does not always equate to higher user satisfaction or retention. 5. Technological investment versus cost management in banking. While banks are investing heavily in technology modernization and AI to boost efficiency and profitability in a low-growth environment, this could paradoxically lead to higher operational costs. The need for continuous investment in technology, combined with rising compensation and compliance costs, may not yield the expected financial benefits, creating a situation where increased spending does not correlate with improved profitability. 6. AI in banking, a double-edged sword. The push towards becoming AI-powered banks is seen as a key to future profitability, yet it may also introduce significant risks. As banks adopt AI technologies, they might face challenges related to data privacy, algorithmic bias, and increased regulatory scrutiny. The expectation that AI will streamline operations could be undermined by the complexities and risks associated with its implementation. 7. Global competitors' adaptation strategies. The notion that global competitors will uniformly adapt their strategies in response to technology adoption rates may not hold true. Different regions and markets have varying regulatory environments, economic conditions, and consumer behaviors. Thus, a one-size-fits-all approach may fail, leading to divergent outcomes that contradict the anticipated uniformity in strategic adaptations. 8. E-commerce features in social media versus authentic interaction. The integration of e-commerce features into social media platforms is expected to enhance user engagement, yet it could inadvertently detract from the authentic interactions that users seek. Users may find the blending of commerce and social interaction disingenuous, leading to a potential backlash against platforms that prioritize sales over community building. 9. Supply chain technology adoption versus resilience. The heavy reliance on technology for supply chain resilience may create vulnerabilities. For instance, if systems become too automated and reliant on data analytics, any disruption in technology, such as cyber attacks or system failures, could severely impact operations. The expectation that technology alone will create a resilient supply chain may overlook the importance of human oversight and adaptability. 10. High deposit costs in banking amid lower rates. As banks adapt to lower interest rates by focusing on non-interest income, the expectation is that deposit costs will decrease. However, the reality may be that high deposit costs persist due to competition for customer deposits. This counterintuitive outcome suggests that even in a lower rate environment, banks may struggle to reduce costs effectively while maintaining attractive offerings for depositors. The report on the projected 50% increase in adoption rates across the gaming, supply chain finance, and social media sectors by Q1 2025 presents key insights that could easily be overlooked. Here are several significant aspects along with explanations of their importance. 1. Technological advancements and gaming sector dynamics. While many people might focus on the projected revenue figures for the gaming industry, the report highlights the role of technological innovations like augmented reality AR, virtual reality VR, and cloud gaming. These technologies are not just enhancing user experiences, they are fundamentally reshaping the gaming landscape and consumer expectations. Significance: this shift signals a potential transformation in how games are developed, marketed, and monetized. Companies that fail to adapt to these technologies may struggle to compete, as user engagement increasingly dictates market success. The focus on immersive experiences underscores a broader trend toward experiential consumption, which could influence other sectors as well. 2. Supply chain resilience through technology. The report points out that companies in the supply chain sector are expected to invest heavily in automation and data analytics, particularly in the wake of geopolitical uncertainties. Technologies such as blockchain and IoT, Internet of Things, are anticipated to improve transparency and traceability. Significance: this investment in technology signifies a shift from traditional supply chain management to a more integrated and responsive model. Companies that leverage these technologies effectively can gain a competitive edge by improving efficiency and adaptability. The emphasis on resilience is crucial, especially in a global environment marked by volatility and uncertainty. 3. Financial sector shift to non-interest income. In the finance sector, the expected dip in net interest income due to rising deposit costs pushes banks to diversify their income streams. The report notes a heightened focus on non-interest income through enhanced wealth management services and investment banking fees. Significance: this trend reflects a significant change in banking strategies, indicating that traditional revenue models are under pressure. Banks that adapt by innovating their service offerings and integrating technology will likely survive and thrive. Understanding this shift is essential for stakeholders, including investors and regulators, as it highlights the evolving landscape of financial services. 4. Social media as an e-commerce platform. The integration of e-commerce features into social media platforms is forecasted to drive user engagement. The report mentions that features like live shopping events and personalized content delivery are set to enhance user interaction. Significance: this trend illustrates the blurring of lines between social media and retail, creating new business models. Brands that recognize this shift and develop strategies to engage consumers in these interactive environments can capitalize on emerging e-commerce opportunities. Ignoring this trend could result in lost market share as consumer behaviors evolve. 5. Common themes across sectors. The report identifies a common theme of technological innovation and data integration across all sectors. However, it also highlights the distinct strategies tailored to each industry's specific challenges. Significance: recognizing these nuanced strategies is crucial for understanding how different sectors will evolve in the coming years. Businesses must tailor their approaches based on industry-specific trends rather than applying a one-size-fits-all strategy. This insight can guide executives in strategic planning and resource allocation. 6. Macroeconomic influences on banking strategies. The finance section of the report discusses macroeconomic challenges, including low-growth environments and regulatory pressures. The anticipated decline in net interest margins compels banks to recalibrate their strategies. Significance: this context underscores the importance of adaptability in financial institutions. As economic conditions fluctuate, banks must remain agile, adjusting their business models to sustain profitability. Stakeholders should pay attention to these shifts as they will affect lending practices, consumer credit availability, and overall financial stability. 7. The role of AI in banking transformation. The report emphasizes the promise of AI-powered banking and the need for banks to modernize their technology infrastructure. It notes that many banks struggle with technical debt, which impedes their ability to leverage AI effectively. Significance: understanding the challenges associated with AI integration is essential for stakeholders in the banking sector. The success of AI initiatives depends not only on technological investment but also on organizational readiness and cultural shifts. Banks that invest in overcoming technical debt will be better positioned to harness AI's potential, thereby improving operational efficiency and customer experience. 8. Cost management in financial institutions. The report highlights that banks are grappling with rising costs, particularly in compliance and technology investments, while revenue growth remains elusive. This necessitates a sustainable approach to cost management. Significance: the focus on cost management reflects the broader economic reality facing many industries. Financial institutions that succeed in establishing a culture of continuous improvement and cost transparency will be more resilient in the face of economic challenges. This insight is critical for executives aiming to maintain profitability in a competitive landscape. 9. Global competitive dynamics and regulatory considerations. The report discusses how global competitors are adapting their strategies in response to changing market dynamics and regulatory environments, particularly in the banking sector. Significance: this highlights the interconnectedness of global markets and the need for businesses to be aware of international regulatory shifts. Companies that navigate these complexities effectively can gain competitive advantages. Understanding the global landscape is crucial for strategic decision-making and long-term planning. Conclusion: the projected 50% increase in adoption rates across these sectors by Q1 2025 holds significant implications for businesses and stakeholders. By recognizing and understanding the nuanced insights outlined in the report, organizations can better prepare for the evolving landscape, capitalize on emerging opportunities, and mitigate potential risks. The focus on technology adaptability and strategic innovation will be key drivers of success in this transformative period. 1. Technological innovation and user engagement in gaming. The gaming sector is projected to experience a significant increase in adoption rates due to advancements in technologies like augmented reality (AR), virtual reality (VR), and cloud gaming. This growth reflects a broader trend in the gaming industry where innovations are enhancing user experiences and driving engagement. The forecast that the gaming market could exceed $200 billion by 2025 highlights the potential for transformative changes in how gaming companies interact with users and monetize their offerings. 2. Supply chain digital transformation. The expected 50% increase in technology adoption within the supply chain sector underscores the critical role of digital transformation in enhancing efficiency and resilience. Companies are anticipated to invest in automation, data analytics, blockchain, and IoT technologies to address challenges posed by geopolitical uncertainties and market volatility. This shift toward a more digital supply chain emphasizes the necessity of transparency and traceability, which are vital for operational success in an increasingly complex global environment. 3. Financial sector adaptation to economic pressures. The finance sector is navigating a low-growth, low-rate environment, leading banks and financial institutions to adapt their strategies significantly. The focus is shifting from net interest income to non-interest income through enhanced wealth management services and investment banking fees. This adaptation reflects a broader trend in the financial industry where institutions must recalibrate their approaches to technology modernization and AI integration to remain competitive amidst economic pressures and evolving regulatory landscapes. For social media and e-commerce integration, the surge in adoption rates within the social media sector is largely attributed to platforms increasingly integrating e-commerce features. Enhanced user engagement through interactive experiences such as live shopping events and personalized content delivery points to a transformative shift in how social media platforms operate. The growing reliance on AI technologies for tailoring user experiences further emphasizes the importance of innovation in driving higher adoption rates and revenue generation within this sector. Showcasing the evolving relationship between social media and commerce. These points provide a foundation for a deeper analysis of the implications of technological advancements across the gaming, supply chain, finance, and social media sectors, highlighting the interconnectedness of innovation, customer experience, and strategic adaptation in response to changing market dynamics. 1. The dot-com bubble 1997 to 2001. This period marked a significant increase in the adoption of internet-based businesses. Companies in various sectors including e-commerce and technology saw massive valuation increases due to the promise of the internet. However, the bubble burst in 2000, leading to a significant market crash. The rise and fall of the dot-com bubble demonstrated how rapidly changing market dynamics can drive adoption rates and compel businesses to adapt their strategies, often with severe consequences. 2. The Industrial Revolution 18th to 19th century. The Industrial Revolution was characterized by a dramatic increase in technological innovation and adoption, particularly in manufacturing and transportation. The introduction of steam power, mechanized production, and the factory system led to unprecedented economic growth and shifts in labor markets. Industries had to adapt quickly to survive, leading to significant changes in business models, labor practices, and even social structures. 3. The 2008 financial crisis. This crisis was precipitated by the collapse of the housing market and subsequent failures in financial institutions. The fallout led to a significant transformation in the finance sector, with banks and financial institutions facing new regulations and the need to overhaul their business models. Adoption rates of technologies such as risk management software and data analytics surged as firms sought to enhance transparency and compliance in a post-crisis regulatory environment. The crisis forced global competitors to adapt rapidly to a new reality of increased scrutiny and changing consumer expectations. Future outlook: projected 50% increase in adoption rates across gaming supply chain, finance, and social media by Q1 2025. Introduction. By Q1 2025, a significant transformation is anticipated across the gaming supply chain, finance, and social media sectors, with a projected 50% increase in technology adoption rates. This shift is driven by advancements in technology changing consumer behavior and the need for businesses to adapt to a rapidly evolving marketplace. Gaming sector. The gaming industry is poised for substantial growth, potentially surpassing $200 billion by 2025. This rise is fueled by innovations in augmented reality AR, virtual reality VR, and cloud gaming, which promise enhanced user experiences. Gamers are increasingly seeking immersive and interactive experiences, leading to higher engagement rates. Companies will likely focus on expanding accessibility and integrating social features to retain user interest. The competitive landscape will see both established companies and new entrants leveraging cutting-edge technology to capture market share. Supply chain sector. In the supply chain arena, a 50% increase in technology adoption is expected as businesses invest in automation and data analytics. Technologies like blockchain and IoT will play pivotal roles in improving transparency and traceability, essential for navigating geopolitical uncertainties and market fluctuations. Companies will increasingly rely on data-driven decision-making to optimize operations and enhance resilience. As businesses recognize the value of a digital supply chain, we can anticipate a surge in partnerships with tech providers to implement advanced solutions. Finance sector. The finance sector is undergoing a paradigm shift, adapting to a low-growth, low-interest rate environment. Banks are recalibrating their strategies to focus on non-interest income such as wealth management and investment banking fees. The integration of AI and advanced analytics will become critical for financial institutions to enhance customer experiences and streamline operations. As economic pressures mount, banks will likely prioritize technology modernization to maintain competitiveness and improve efficiency. The anticipated decline in net interest income will push banks to innovate and diversify their revenue streams. Social media sector. Social media platforms are increasingly integrating e-commerce features, leading to a surge in user engagement. The anticipated 50% increase in adoption rates will be driven by the incorporation of interactive experiences like live shopping events and personalized content delivery. As AI technologies evolve, platforms will enhance user experiences, tailoring content to individual preferences. This shift will create new monetization opportunities through targeted advertising and partnerships with brands, solidifying the role of social media as a key player in the digital economy. Common trends and differences. Across all sectors, a shared emphasis on technological innovation and data integration is evident. While gaming and supply chain sectors prioritize user engagement and operational transparency, the finance sector is focused on regulatory compliance and diversifying income streams. The social media industry stands out for its rapid evolution towards e-commerce integration, reflecting changing consumer preferences. Timeline of events. 1. 2023. Initial projections indicate shifts driven by technological advancements. 2. Q1 2024. Significant investments in automation and data analytics begin to materialize, particularly in supply chain and finance. 3. 2025. The anticipated 50% increase in adoption rates is realized, accompanied by substantial business strategy adaptations across all sectors. Conclusion. The projected increase in adoption rates across gaming, supply chain, finance, and social media sectors signifies a transformative period driven by technology and changing consumer behavior. Businesses must remain agile and responsive to these shifts to thrive in an increasingly competitive landscape. By leveraging innovative technologies and focusing on customer-centric strategies, companies can position themselves for success in the evolving market of 2025 and beyond.